All right, everyone, here we are with ticker symbol RKT, Rocket Companies Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back. And before we jump into this chart, I want to go ahead and state to everyone, I'm going to do a trivia question towards the end of this video. And it's just a question to go ahead and engage you guys down below in the comments section. And not only that, but so that you guys can keep a close eye on these very important cues, and the point is so that you guys can memorize them and pay close attention to them in the coming days and weeks. So that's the whole point of the trivia. It's not about who gets it right or who gets it wrong. It's just to engage you guys down below, and I would love to see your guys' input. And not only that, but that way you guys are learning and growing together and remembering these cues that are very important to keep in mind and what we're seeing here in the chart. So I hope it's something that's helpful and informative moving forward. And if it doesn't work, then it's okay. I respect it and we won't do it anymore. But I believe that you guys will benefit from it, because if there's anything that someone missed after watching the video, they can go down to the comment section and check out what that question was, because that's probably going to be one of the most important things of the chart coming up for the following days. So let's jump into this chart. So Rocket Companies has been in a bearish run. We did see this slight pickup here after the Realtor.com news, and it started to fall again, and it hit new lows. Super important to keep that in mind. 1780 was the lowest point that we've seen, and it is the new low that we've seen even since IPO. It was the lowest point we've seen this stock reach, 780, and it has bounced back from that point forward. We've created support levels and broken through resistance levels, and we're back up here at 1942, and the highest point reached was 1997, and the 50-day moving average is 1883. Super important because we're now in bullish territory. It lets us know on what side of the chart we're in. So when we're above, we're in bullish territory. When we're below, we're in bearish territory. So let's move our resistance to its new location, and I want us to look at this closely, and we're going to talk about it a little bit broader as we zoom in and then talk about it zoomed out. So the highest point is up here at 1997. Super important to keep that in mind. If it breaks through that, this will hit newer highs and new resistance levels, and the lowest point reach is our new support. Now, before this bullish run continued, the lowest point was down here at 1870, and I'd keep that number in mind if it breaks through the 50-day moving average of 1883. But for the bulls to continue their run and momentum, they need to break through resistance, and that's 1982. They need to turn 1982 into a support, break away from it, reach new highs and new resistance levels so that they can pull away and go ahead and pull away from the 50-day moving average, getting deeper into bullish territory. So super important for the bulls to break through 1982 and turn that into a support. On the other hand, we have what the bears want. The bears want to break through this support, bring this closer down to the 50-day moving average, and start to bring this into bearish territory. Super important to keep in mind. If this gets broken through, you have that window from 1919 to 1883 to see how the stock is reacting. How quickly is it hitting newer lows, or is it bouncing back, letting the bulls bring this one back up to then reach their resistance level, which is their goal, 1982. So I want to emphasize to all investors, pay close attention to the behavior of this stock. If it breaks through support, which is 1919, and how quickly is it hitting newer lows, or is it getting closer to the 50-day moving average fairly quickly, or did it recover before getting there and bringing itself back up within bullish territory? As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community, and don't forget to hit that like button to let me know you watch this video. So, a trivia question. The question will be, what is the lowest point reached in this stock chart in this bearish run, and was it the lowest point we've seen since IPO, or did it get close to the IPO lows? That's the question. What is the lowest point reached in this bearish run, and also did it go below IPO lows, or was it close to the IPO lows, and it didn't break through it? I want to see your guys' comments down below. I look forward to seeing your comments. It's not about getting it right or wrong. Everyone has and deserves the right to go ahead and answer the question, and that way we can all engage and learn together. And again, it's a great way for us to memorize some of the important points, because that low, if it broke through IPO lows or it got close to it, it's one of the lowest points in this bearish run, and I would emphasize paying close attention to those numbers for the next coming days and weeks. As always, thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28 and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.